Guys, I'm going to share with you what you must know about Amazon, Apple, and Meta earnings. They just reported. Let's get to the first one. My good friend, Meta. Guys, I'm going to brag for a second. I started dollar cost averaging in Meta around $230, I think it was, all the way down. I actually bought it at the low of $88 a share on November 4th, 2022. And guess what your fearless leader did? Stupidly sold at $195, thinking that the surge was too fast. Guys, they just crushed earnings and revenue. They reported $5.33 per share, Mo, versus $4.97 expected. They reported $40.1 billion in revenue versus $39.2. Let's go take a look at this, because the $40 billion, let's go quarter to quarter so we can pull it up in our software here. Guys, the last quarter of 2022, they did $32 billion. I want everybody to go back. When the stock was at $88 a share, Meta is dead. You don't get it. They can't generate any more income and revenue. $32 billion. They just reported $40 billion. That is an increase of 25%. News follows the stock price. Stop listening. When we were dollar cost averaging below 230, people kept saying, you guys are so stupid. Look at it. It's under 100. You started buying in the mid 200s. Look how dumb you are. This is why you need to be patient at times. It is now at $445 a share, up $50 after hours. It is absolutely crushing all-time highs. Mo, would you like to shoot me, or do you want me to shoot you first after what we just did with Meta?
Listen to some of these numbers. This is the thing that always gets me about Meta. We always talk about how they have basically half the globe that uses their products, Instagram, Facebook, and WhatsApp. Daily active people, an increase of 8% year over year.
For a company that has, for a company that has half the world on them, and they saw an 8% year over year increase.
And daily active users, an increase of 6%. How is this possible?
Wow. We kept saying the ad revenue side of Facebook is still in its infancy.
And if you want to talk about AI for a second, our analyst Dalton, how many times does he say they are in such a good position to take AI and just dominate that category?
And you know what's funny? Every single time you say our analyst, I think about Jordan Belfort, Leonardo DiCaprio, sitting in that investor center and talking about our analysts think the stock has amazing upside potential. About is it Teledyne? What was it? What was the name of the company? Aerotyne. Great movie, guys. Meta, we love Meta. Look at the 8 pillars here. Now, obviously, when the stock goes up 5 times, this thing was at single-digit price to free cash flow and PE just a year and a half ago. Not even a year and a half ago. Look at all these numbers. I mean, this company is a beautiful company. They have so much cash on hand that their debt levels are low. I'm hoping this ends up...
more info. We repurchased $6.32 billion in shares and $20 billion of our Class A common for the fourth quarter, full year 2023. They also announced another $50 billion increase to their share repurchase.
And what else they do?
And
what else they announce?
The
quarterly dividend. All right, so let's talk about the dividend, because everybody loves dividends, and you know we're the people who say it's the last thing you should do with your money. I like the idea of one-off dividends.
Yeah.
Special dividend, rather than committing to it, because I look at this saying, let's say hypothetically, Facebook went back to $100. I'm not saying it's going to. Let's say hypothetically it did. If they're paying that dividend, they're doing disservice to everybody and every investor. Use that money to buy back those shares. And they're still going to buy back these shares at really high, at record highs. But the question is that a reasonable amount? Let's look at the analyst estimates, Mo. Look at this growth in profit. They're expected to go from $17 to $30 a share over the next 4 years. That is well into the double digits of growth. And the revenue, high single digits, low double digits, $152 billion to $220 billion. Oh my, guys, they did $40 billion in revenue last quarter versus 32 the quarter before that. A 25% increase.
I just keep thinking, how can they keep growing? They have half of the freaking globe, probably more than the globe now. How are you going to reach more people? They do it every single quarter.
All right, let's check out Amazon. And guys, don't forget, stay with us a little bit longer. At the end of this video, we're going to do our stock analyzer tool on all 3 stocks to tell you what we think our fair value is in the companies and which ones might be a good opportunity. Amazon reported $1 per share. They absolutely crushed it as well. They were expected to do 80 cents per share. It did 170 billion in revenue versus expectations of 166.3. Let's see what Amazon is doing after hours based on our software. Oh, wow, they're up 5.5%, 5.7%. Are these all-time highs? No, all-time high was July 13th, 2021 at 188, and they're currently at 168. So Jeff is still rich as F. Year to date, keep in mind, guys, we're in February 1st. It's February 1st right now. Year to date, up 6%. So their annualized is pretty awesome. Yeah, I mean, this is... Amazon crushed it. Mo, what do you got on Amazon? There's a lot of good data out there on Amazon.
Yeah, so the company reported 13.2 billion in the fourth quarter, and this is the number that I wanted to emphasize, up 2.7 billion
from a year ago. Before. Up from 2.7 billion, not from up 2.7, up from 2.7. So they 5x'd.
Yep. And I will say this, moving into a new house, you don't know how much you use Amazon. You know.
Yeah, well, we used Amazon anyhow. Literally, I'm like, oh, I need Q-tips? Okay.
Growth at AWS improved relative to the 12% rate seen in the third quarter. Let's see what else we have. Advertising services revenue increased 27% to 14.7 billion.
Now, what people have to remember about the ad center of Amazon, when you're an Amazon seller, you can then buy ads like Google has and sell to people and get your ads placed. If you look, when you search a product, the first 2 or 3 will say sponsored. That's what they're selling there. And these guys will spend, 10 to 30% of their revenue on ad costs to get more and more sales. So Amazon is just becoming the Google for themselves. So they're sitting there saying, hey, buy our products. We're going to charge these people. And yeah, by the way, if you want to sell more of your own products, pay us for ads. We'll place your product even higher. Incredible, isn't it?
It is incredible. It's absolutely incredible.
Now, guys, let's get into Apple. They reported $2.18 per share in profit, beating expectations of $2.10. And they reported $119.6 billion in revenue, beating expectations of $118.3. They're down 2%. Okay, they keep fluctuating. Let's go see these quarterly numbers to see how that compares. The previous December quarter was 117.15, so up 1.5%. That's pretty impressive, guys. I mean, this is Apple. This is an amazing company. It's down 2% after hours, so they beat and they're down. Amazon and Meta beat and they're skyrocketing. This is why we never know what's going to happen. Apple's a much more mature company. I can't believe I'm claiming that Apple is a much more mature company than 2 other trillion-dollar companies.
I know. Isn't that funny? Here's a statement.
That's like Charlie Munger saying to Warren Buffett, he's a lot more aged and mature than Warren Buffett. But what did Tim Apple say?
Today, Apple is reporting revenue growth for the December quarter fueled by iPhone sales and an all-time revenue in services. There you go. Services are big. We are pleased to announce that our installed base of active devices has now surpassed 2.2 billion, reaching an all-time high across all products in the geographic segment.
2.2 billion.
About Vision Pro.
So one thing that Mo and I like about subscriptions, we think it's really going to really drive up their gross margin and their profit margin. This is where Apple can get slower growth, but higher margin, because subscriptions are services, and services tend to have much higher margin than products, right? You sell an iPhone, you have hardware costs, you have those labor costs of service. Once you've made the service, it's all about, like I have that Apple One service. I don't know what I pay for that, $35 a month. That's probably
about $40 a month.
Yeah, it's probably like 95% margin or something. I don't know what exactly it is, but it's a huge margin, right? So you look at Apple going 2.93. They just lost their rank of the world's most valuable company in Microsoft. They're down 2.3% now to 182.68. All-time high. They were just shy of $200 a share. Just shy of $200 a share on December 14th, 2023. Mo and I had a bet at $200 a share. Mo was going to have to get an Apple tattoo on his chest. He got very, very close to that. Wouldn't that have been amazing?
Thankfully, I won.
Yeah. All right, so let's check out the 8 pillars on Apple. Just like the other 2 companies, guys. Well, no, actually, Amazon, it's much worse. But either way, just high PE and high price of free cash flow. Is that a lot? I don't know. Warren Buffett's buying the company. And the thing I like about Apple is Warren Buffett's advising Tim Cook, who Mo calls Tim Apple, which I think is a great name. He's advising Tim Apple on how to properly allocate the cash that comes into the business. If you're new to our channel, you're going to hear us talk about this. Capital allocation, what the CEOs do with the money that comes in the business, is their most important job, and it's often the most overlooked role of the CEO. They need to be able to take that cash and do the best thing with it. You can do 5 things with free cash flow: buy back shares, pay down debt, pay a dividend, reinvest in yourself, or make acquisitions. Any one of those at the wrong time is the wrong decision. So that's the thing. It's not just do those. So you have to sit there and figure out, and the dividends are the last thing the company should be doing with the money. So it comes around here to say, what is the right price for these companies? What we're going to do, we're going to go through our stock analyzer tool on what the value for the companies are based on a 9% return. So I'm going to pull up Apple, the most recent time I did it. Now, guys, I'm not going to go through every single line, but I did here. What I'm going to do, I'm going to change my PE. I'm going to keep my PE. Nope, we're going to keep it like this. And this is what's so great about our software. You can come in and you can work with it, and you can talk in our community about the different ideas. But I have Apple worth low side, 9 to 100, high side, 226 to 240, middle side, 140 to 150. That's based on a 9% return. Okay? Now, let's go to Meta. Again, the 9% return, a couple of revenue growth numbers, and by all means, if you want to look at them more deeply, you can just pause the screen. But it has now come a little bit more nosebleed. Guys, this is how absurd $88 a share was. And people kept saying, well, yeah, it's absurd because Meta's declining. 221 on the low side, 576 in the high, 361 in the middle. And again, guys, these don't include any margin of safety. Any margin of safety. And finally, for Amazon, and before I go to Amazon, if you like the software, if you like the community, we have a free trial, 7-day free trial at everythingmoney.com. It's well worth it. Go check it out. You can use the software. Oh my God, Amazon's up to 170 now, Mo.
Jeez, they're gonna get to all-time highs again.
Probably. So I'm going to do 9% return. I'm going to do a little bit lower revenue growth. I'm going to do 4, 7, and 10% revenue growth. And I have a price of 37 to 193, middle price of 95. Guys, check out our free trial, everythingmoney.com. Thank you for your time.